Welcome dear students. I am Pooja Parishwad. Today we are going to discuss on computation of annual value under income from house property. Let's start. There are 5 heads of income, means a person can earn the income from different sources which are classified in these 5 heads of income under Income Tax Act 1961. First head is income from salary. Second head, income from house property. Third head is income from business and profession. Fourth head, capital gain. And fifth head is income from other sources. Now, we are going to discuss how to compute annual value for computation of income from house property. Then, question is that, what is mean by income from house property? Let's see. Income from house property means the annual value or rental income of a house property which is chargeable to tax. However, at the time of computation of income from house property, the house property or portion of house property which is used by the owner for his own business or profession is not covered under this head, that is income from house property. Okay. Then what is mean by annual value? On which basis income from house property is determined? Here annual value is the sum for which property is reasonably expected to be let out from year to year. We will discuss how to compute annual value in the next slide. Before that, let's see different classification of house property to determine the income from house property. Okay. House property may be any one type of these given 6 categories. First one is let out house property, that is denoted as LOP. Second category is self-occupied house property, it denotes as SOP. When house property is occupied by owner himself for his own residence, and in case of let out house property let out for residential or commercial purpose. Now, the third category is part of the year SOP and part of the year LOP. In this case, fair rent of property for whole year shall taken into account. Fourth category is house property partly SOP and partly LOP. In this case, annual value of let out portion have to be determined separately and annual value of self-occupied portion have to determine separately. Okay. Now, fifth category is more than 2 houses SOP. In this case, any 2 house of owner's choice is treated as SOP and remaining SOP will be treated as deemed to be let out. And last one, house reserved for SOP. In this case, annual value is nil provided that such house is not actually let out and no other benefit is derived therefrom by the owner. At the time of computation of income from house property, you have to study main 2 types, that is let out house property and self-occupied house property. Pro forma of let out house property and self-occupied house property we will study in the next video. Before that, in this video at the time of computing income from let out house property, you have to determine annual value. To determine annual value, determination of gross annual value is the first stage. Then how to determine the gross annual value? Let's see. For that purpose, you have to consider these given 4 factors of house property. First one is municipal value, second one fair rental value, third one is standard rental value. Standard rent is the fair rent of house property determined under the Rent Control Act, where Rent Control Act is applicable. Fourth one is annual or actual rental value. Okay. Now, what are the steps for determining the gross annual value? There are 3 steps to determine the gross annual value. First step is you have to compare municipal value with the fair rent and take the higher amount. Second step is the amount of first step have to compare with the standard rent and take the lower amount. It is also called as reasonable expected rent. Okay. Now, in the third step, you have to compare the amount from step second, that is reasonable expected rent, with the actual rent and take the higher amount. Now, whatever amount you get is the gross annual value. Okay. Now, second stage is to determine the net annual value. Then how to determine the net annual value? For that purpose, you have to deduct municipal taxes paid by owner from the gross annual value. Then you will get the net annual value. Here, payable municipal tax by any other party cannot be deducted from gross annual value. This point is very necessary, important, how to remember by the students. Okay, only municipal taxes paid by owner only can be deducted from the gross annual value. Then you will get the net annual value. Okay, is it clear? This is the simple process of determining the annual value of the house property. In the next video, we will discuss about the pro forma of let out house property and pro forma of self-occupied house property. That's why don't miss to see the next video. And in this video, if you like this video, please subscribe the channel, like and share the video. Thank you, my dear students.